Hello Sector Watchers, welcome to the show. This is the 91st episode of Sector Spotlight on Tuesday the 10th of August, recording it on Monday the 9th. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. If you have anything to share with me, any comments, etc., please use any of the channels on the screen. I love the interaction, love the discussion and love to hear what you have to say and take in any of your suggestions. It's not the first Tuesday of the month, it's not the last Tuesday of the month, so no seasonality and no monthly charts. And that means that we're gonna use the full half hour to focus on the rotations that are going on in asset classes and sectors. This is Sector Spotlight. Starting with the rotations for asset classes. On the left hand side, the daily RRG for the various asset classes. On the right hand side, the weekly version. And if we take a look at the last 5 trading days of rotation, that's the Friday, August 6th is the last day of that. Then we see that it was a good week for stocks, but it was also a strong week for the dollar, for the US dollar, since a long time, picking up really nicely. Real estate picked up well. The benchmark, VBINX, up 0.4, so 40 basis points. And then on the downside, the biggest losses actually for commodities. And we've seen a lot of gains for commodities over the last weeks, months probably already. And it looks as if they're now getting into some sort of a pause or rolling over, because when you look at the tails for commodities, you see GSG barely in leading and hooking back down into weakening and towards lagging, and you see a similar rotation for DJP. It's coming out of leading into weakening, but at that negative RRG heading, and you see quite similar rotations on the weekly RRG. So here's a little bit more in line with each other, but you see the relative weakness for both commodity indexes starting to pick up. So I do think that the long-term turnaround for commodities, as we describe it in our monthly overview and when we look at the monthly charts for commodities, I think that's all still there. But for the short term, maybe a little bit more caution, because I do think that versus the rest of the world or versus the rest of the asset classes, commodities could see some more relative weakness in the coming weeks. Now, the most important relationship, of course, is that of stocks and dollar I want to talk about. But let's have a look at stocks and bonds first. And we see that for me, the last weeks already, it's a little bit of nothing. There's no clear direction. There's no clear breakouts. We break out, we drop back. We break out, we drop back. We go up 80 basis points. We go down 1%. We go up 50 basis points. We go down 55 basis points. Then we go up another 0.5%. But it's not like there's no real nice trends, no real nice breakouts, and that still makes me very, very cautious with regard to stocks and stock markets in general. If we look at the short term, obviously it was a pretty good week for the stock market with 90 bips. If we isolate that tail here, then you see that that tail is not moving nicely into the leading quadrant. It's the only one in the leading quadrant at the moment for asset classes. And at the end of the week, it started to actually roll over. It's not very, very visible yet, but you saw the first signs of weakness. And what you can also see is that the distances between the observations were getting smaller, which is an indication that the power behind the move is fading. If you look at the weekly, you see sort of a opposite picture where ITOT is inside weakening, but it's picking up, which usually is a strong sign, because we know that when you're in weakening and you start to pick up and you rotate back to leading, that's the next lag in a bull market. That is all still very possible. Bear in mind that when we look at gov, because this is all relative, so here you see government bonds moving sort of opposite to ITOT as they usually do. Gov's inside lagging and picking up over the last few days, so that is picking up a little bit of relative momentum. And if you look at the rotation for GOVD on the weekly RRG, then you see it's improving and rolling over, so it's making the opposite rotation. The rotation that we see here is still suggesting a preference for stocks over bonds, which is what we've been talking about, well, not forever, but a long time. It doesn't mean that the market cannot come down. So when we take a look, and then, oh sorry, here's the US dollar. So the dollar here is inside improving, sort of stalling here at the end. And when we look at the daily, then you see that it is starting to pick up strength inside the lagging quadrant. And I want to switch to some regular charts to point that out. If we look at the dollar, then you see that we've been testing support levels that go back to 2018, and I think that we're now at an interesting juncture for the US dollar. Around 93, 93.20, there is overhead resistance. If we take that out, it looks as if we're completing this double bottom formation. After that, there'll be a little bit more resistance around 95, and then it's pretty much all the way up to 100, 101. Now, if we translate that to the most important currency pair that we have, and that's the euro-dollar chart, then you see the reverse, obviously, because it's euro in terms of dollars. So when this one goes down, that means dollar strength and euro weakness. And if we translate those levels that we saw on the dollar index into euro-dollar levels, then I think that 170.50, 117.50, 1.1750 is an interesting and important level to watch. If we break that, there is a little bit of support left around 117, then it's back towards 116, and then we're going into that. Let me see if I just give it a little bit more of data. We can go down to 114 and lower, and then that means real dollar strength versus the euro. By the way, with a little bit of fantasy, you could see a very big head and shoulders shaping up here, and that trend line would be around current levels. So keep a close eye on the euro-dollar chart, because I do think that it's an interesting chart. So we're at an interesting juncture there. If we look at, if we quickly go to government bonds and well, let's do government bonds. So here, the Gov chart. It's a little bit messy. It's it looked like a pause, a correction inside the falling trend. We're now breaking out of that, but not really going higher. So we're stalling around 27. So I'm not sure what to make out of this. We're breaking this sort of shallow trend line. I made it very light because it wasn't a very strong trend line in my opinion. But bonds are going up. Bonds are going higher, pushing yields down. That in itself should be good for stocks, but right now it's very doubtful. If you look at the relative strength line, you see that the rate of change to the downside, so it's not picking up. You see that it is getting more shallow. But if you look at the RRG lines, you see that getting more shallow is already fading, because you see that green RS momentum line is already starting to roll over. It's now keeping the RS ratio line under pressure. Not sure whether this is a very strong chart that can go much higher, so pretty cautious with that as well. And if we then bring that to SPY, let's do SPY here, then you see that uptrend is obviously still there. The outperformance versus VBINX is still there, but we're rolling over, we're losing relative strength. That is getting a little bit more flat. That's what we just saw on those RRGs, that stocks are picking up and bonds are rolling over. That's what you see here in this chart. The one chart that I'm keeping my eye on for a couple of weeks already is the weekly S&P chart in combination with the RSI. That uptrend's still there, but look at this. Is this? Let me see. This is 1, 2, 3, 4, 5, 6 weeks already. You see that we're making. We're going higher. The weekly highs are higher than the previous weekly high. but it's not like a real nice push higher. We're not seriously breaking higher, and that's what worries me, especially in combination. And that's what you very often see in these situations. That RSI is not picking up. It's not pushing to new highs. It's not pushing above that resistance line. So it keeps that negative divergence intact. And in combination with a lot of other things, that is something that keeps me on my toes. And makes me very, very cautious with respect to the stock market in general. Let's have a look at the sector rotations of last week. Again, a pretty interesting week, I have to say. If you're on the left-hand side, we have the daily RRG 5 trading days. That includes Monday. Market has just opened. I'm recording a little bit earlier than usual this week. The reason is that it's a holiday. My wife has her block leave, and my daughter doesn't have to go to school, so she's not doing homework, which means that I've got the office to myself and I can quietly record this show for you guys. Normally during the day my wife is sitting opposite to me doing her job, and when the girls come out of school then she's doing her homework and I just can't record in a full office. So there you go. That's why I usually do it later at night, and now I can do it during the day. Market has just opened. It's a little bit past 4 here in Europe and slightly down. Europe was mixed. US opened slightly down, and you can see that reflected in the data that we're looking at right now. So this is already including the 45 minutes of trading that's been going on. I'll just take it in as it is. Again, if we look at the daily rotations, then very good week for financials. There you see that acceleration in that tail, followed by utilities, and then technology continues to do well. It's inside weakening here on the daily RRG, but flat and slightly picking up, so it's quite good. Healthcare, short tail, inside leading on the right hand side, still moving higher, so that's good. Materials, interesting move, so it's doing pretty good there. The S&P itself obviously up 90 basis points over the last 5 days. Communication services starting to drop a little bit, rotating from improving back into lagging. We got to check that because that's now getting a little bit more negative. Real estate picking up inside the weakening quadrant. Industrials rotating back down into lagging. I'm going to put that side by side with the weekly in a minute. Staples doing the same, coming from improving, leading, now back into lagging. Discretionary, the same, starting to push further into lagging. And then we have energy. Energy is an interesting sector over the last weeks, months, because it's flying everywhere. So here you see it inside improving, with a very thick tail, and only today it starts to roll over and lose some relative momentum. On the other hand, it is still the weakest sector in terms of RS ratio. So what do you do with this? Well, let me first of all explain, because this is a super good example. I got another question through mail the other week, and I've answered that question many times before, is why there is a difference in line thickness on the RRGs. You can see that the difference in line thickness stands out, and in this one particular is very, very visible, because XLE is now got a very thick line, and all the others are relatively thin, especially the ones that are close to the benchmark. And that's exactly what this thickness of those lines mimics. The further away from the benchmark, the thicker the line. And the closer to the benchmark, the thinner the line. And the reason for that is when you're far away from the benchmark, when a relative move has moved far out, that means that there is a a lot of potential alpha in that move because it moves disconnected from the benchmark, and that's where you can create your alpha. So a big discrepancy between the price of the benchmark and the price of that sector, and in this case it's XLE. And well, you've seen that we've seen energy flying like 100% and dropping 25%, which makes it a very good sector for shorter term or swing type trading. And you see it again last week, and then if you look at the last 5 trading days, actually lost 70 bips. If we do it until last Friday, they picked up 20 bips. But the point is, they're moving so disconnected from the benchmark, those energy stocks, that it is definitely a sector to keep an eye on. If I tick this one off, because I think it's an outlier if you look at the whole chart, so if I tick this one off and then fit the chart, we can have a better look at what's going on in the other sectors. By the way, here the energy sector on the weekly is very clearly pushing into the lagging quadrant, confirming its relative downtrend and the negativity. And on the daily, where it's inside improvement but starting to roll over, while it is the lowest rated sector on the RS ratio scale, a little bit more relative weakness, and both the daily and the weekly tails are back in sync, and we see a further underperformance of the energy sector. If we look here, let's do them side by side. So you got materials here. Short term okay, but the longer term trend is definitely pushing it towards the lagging quadrant and more weakening. If you look at communication services, then this is an interesting one because it is in improving but rolling over back to lagging, and on the weekly it's now starting to pick up negative momentum and starting to move lower on the RS ratio line. So going to keep an eye on communication services because it might be that the positivity, the relative strength of communication services starting to fade. Financials picking up very, very strongly, but if you look at the weekly, then it's actually pretty negative. So not sure what to make out of it. Actually today is a pretty strong move, as you can see here. So we'll have to see how that pans out. This was Friday, this is today, so we've got to see how that pans out the rest of the week. The longer term trend though is definitely one of underperforming the S&P 500. Industrials pretty much the same, and you can see here that industrials now starting to rotate back into, wrong chart here, starting to rotate back into the lagging quadrant, stalling a little bit here over the last 2 days, but that tail on the weekly is definitely pointing towards the lagging quadrant for industrials, so underperformance there. If you look at technology, that's probably, well, maybe it's again the strongest or one of the strongest sectors, because the weekly tail is very, very clear. Strong RS ratio, strong RS momentum, strong RRG heading as a result of that. And you see that here on the daily. We lost some relative strength, but it's flat. It's not picking up downside momentum. And if this continues and we can pull this back up and XLK can start rotating towards the leading quadrant, it's going to push the weekly tail further into the leading quadrant and making XLK the strongest sector in the universe at the moment. Look at staples, that is actually very weak, where we're pushing into lagging. We see that today is actually a pretty good day. We'll have to see how that pans out, but on the weekly we just rotated back into the lagging quadrant. So for the time being, staples definitely an underperforming sector. Real estate holding up very well. Here on the daily rotation you see it rotating back up. It's inside weakening, but it's rapidly moving towards leading. And on the weekly RRG, in terms of RS ratio, real estate is the strongest sector by a mile, followed by technology. But you can see there's quite a big difference here. So real estate definitely in a strong relative uptrend versus the benchmark, going through a pause. But if you look at the daily here, then it could be the sign, if this continues and if the daily RRG XLRE will move into leading, it can pull that weekly around and make it another strong up leg for the real estate sector. Utilities, a good week last week, pointing strongly into the leading quadrant. Looking at the weekly RRG, you see that it is now, it hooked over. So let me blow this up, because this is actually 2 weeks. So the last observation is only 45 minutes of trading of today. That's this one here. You can see that's the week ending August 9. Well, that's actually the weekly chart that begins on August 9. So we discussed this before. I think the regulars will know what it is. So picking up now, but it started last week. So this is last week's movement, and you see that it is picking up, and now it's accelerating, and that's because of this move that you see here on the daily. So utilities, despite the fact that it is by one, no, it is actually the weakest sector on the RS ratio scale, but it is starting to pick up. We'll have to see how that pans out. It needs a lot of work before it crosses over into leading, but for the time being, keep an eye on it. Utilities seem to be picking up a little bit. Sector that's doing really well is healthcare. You see here there is a little zigzag there, but it's predominantly moving to the right, higher on the RS ratio scale, still good on RS momentum. But what I really like is the weekly version of that tail, which is pushing further into the leading quadrant, confirming the relative strength of the healthcare sector for coming weeks, and both are in sync, so I'm going to expect more outperformance for healthcare in coming weeks. Now we have the discretionary sector, which is nicely moving in opposite directions, because here on the daily RRG you see that the tail is pointing rapidly into the lagging quadrant, suggesting further weakness ahead in the coming days. And what we see here is that there is some improvement on the weekly scale, where discretionary is moving into the improving quadrant, and the question now is whether the strength of that weekly relative trend for discretionary will be strong enough to pull that around, or whether XLY will pull around and get back in sync with the discretionary tail on the weekly chart, making it a more positive sector, or whether this rotation, and it is a new rotation moving, we had that weakness before, we picked up slightly, and now we're starting to move back down lower into the lower left-hand corner, to the lagging quadrant. Whether this is the start of a rotation for XLY inside improving and back down. Time will tell. It's confusing at best, so there's no very clear sign here. And let's have a look at a few of those charts itself. So we've got, and I'm going to make this the weekly RRG to put that all into a slightly better perspective. So this is actually confirming that weakness, that relative weakness for materials. Be careful with that one. And we have communication services, which we pointed out, is starting to fade. On the chart itself, it's still looking pretty good. It's holding up above resistance here in the raw RS line, but you see the weakness coming in from the RRG line. So that's a neutral to slightly negative. Energy, definitely one to keep an eye on in terms of downside, and you can see why. That we bounced off that resistance, we completed this rising wedge. RRG lines rapidly pointing down, not being able to take out overhead resistance in relative strength, and there is a support zone here between 43.50, 40.46. If that gives way, there is much more downside for the energy sector to be seen. Not there yet, but definitely one to keep an eye on. Financials. Let me bring that one up here. Struggling with that lower boundary of that rising channel. Short term good. We did not. It's not a series of higher highs, higher lows anymore. It's also not a series of lower highs and lower lows. So it's a sort of a consolidation. We see that here in the RS line itself, and we see a rapid deterioration in the RRG line. So for financials, slightly negative, I would say. Industrials, very clearly a negative, especially from a relative point of view, and you can see that we're now struggling with that rising trend line. When that gives way, and especially when that support line here 99.40 gives way, that'd be the signal for much faster acceleration downward for the industrial sector. If we go to technology, then that chart obviously is very strong. That breakout is nice. We just touched the upper boundary of the channel, which means that the uptrend is in full swing, because this sector, unlike many of the others, this one has been able to actually touch the upper boundary of the rising channel, which is good. The only thing that we need to see here is a break of relative strength about its highs, because in terms of relative strength, this sector has done nothing for a year, almost a year. The sector been performing in line with the S&P 500. We got to need for a break higher and see if this can be the sector that is driving the S&P higher, or if other sectors are going down, this is the sector that's going to be able to keep the S&P at reasonable levels. Look at staples, then you see a rotation down towards lagging. That's very clear here. We see the break in relative strength and the rotation lower. In terms of trend channel, we're right in the middle, as you can expect for a defensive sector. It's just muddling along, and this will only start to play up when things really get stressy and markets get under pressure. That's when you will see a sector like staples to pick up again. Real estate, as we discussed, one of the stronger, if not the strongest sector in the universe, and that's what you can see here on the chart. Price-wise, no problem at all. Relative strength, just going ahead, running into a little bit of overhead resistance. Is that where you see the pause in the RRG lines? But the RS ratio line is at super high levels, confirming the relative outperformance, relative uptrend of this sector versus the S&P 500. Now, utilities, as we just saw, starting to turn around. And if we look at the chart, then you can see that turnaround building up here. You can see that slight improvement of relative momentum is picking up. What's important here, I think, is the 68 level. If utilities, XLU, can actually take out $68 in price, that is a very important resistance level. That will very likely cause an acceleration and push utilities even further up, and on the weekly into the improving quadrant and heading towards leading. So this is a defensive sector that's on the brink of actually turning around. Not there, we've got to wait and see how it pans out, but unlike staples, utilities is actually very close to a turnaround and a positive signal. Another defensive sector that's doing really good is healthcare. If you look at the tail on the RRG, then you see that it is pushing into the leading quadrants, pushing further in there. And we've already pointed out the break out of that rising channel, and we're still holding up above that former rising resistance, now expected to act as support, but we see the acceleration going. You see that also going on now in terms of relative strength. And if you look at the RRG lines, we have only just begun. It looks as if it's already had a long run, but if you look at relative strength, we've only just begun here for the healthcare sector. So this is one of the sectors, together with tech, together with real estate, that I think has a very good chance of more improvement in coming weeks, relative improvement in coming weeks, I have to say. And finally, the discretionary sector, the push into improving. Here you see that the sector has not been able to push to the upper boundary of the channel. And what's worrying me is, well, this is a nice tail, but if you look at the at the raw relative strength line, then you see it's been holding up, and you see that this is actually a bounce off support, and you see three very important lower highs, or two low. You see one, double top, and then two lower highs already in place. So if the relative strength line of discretionary versus S&P 500 drops below its most recent low, then I think that this is going to turn around very, very rapidly and make discretionary one of the weaker sectors. So being held up right now predominantly by the large cap stocks. We have to wait and see how strong that is and whether it will succeed to do that. So quite risky for the discretionary sector. And this concludes Sector Spotlight for this week. Ladies and gentlemen, thank you for watching. If If you like the video, please don't forget to give us a thumbs up. If you'd like to be in touch, use any of the handles on the screen. Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. And I hope to see you back at the next episode of Sector Spotlight.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.